there, and welcome to Economic Observations. My name is Chris. Today is the 8th of January. It is a Saturday. We got 10 inches of snow yesterday, so everything here was kind of on hiatus. Schools were closed, stores didn't do well, but on the day before, on Thursday, supermarkets were full and you can barely find anything on the shelves. It is expected to be a high of 12 degrees here on Tuesday, with a low of just 0. Welcome to New England. I wish I can do some outdoor videos, but the weather in New England just prohibits that. Okay, so Dollar Tree. Have you been to Dollar Tree lately? Just wait. One day you're going to go to Dollar Tree and all the prices are $1. And the next day you're going to go and everything in the store is going to be $1.25. Yeah, you got that right. They're not choosing and selecting which items are $1.25. Everything across the board is going to $1.25. So buyer beware. Bring a few extra dollars with you just in case. The store clerk couldn't tell us when it was going to happen. All they would say is that it's happening before January 31st. So who knows? It could be tomorrow. All right, I don't know if all the stores are going to do it on the same day or if it's going to be store by store, but just buyer beware. Also, did you know, I found this tidbit very interesting, that when fishermen in Scotland, Sweden, and even in the United States fish for cod, they gather all their cod and put it in a container and send it 10,000 miles away to China. And over there, China fillets the fish, puts them back in a container in packaged bags, and sends them back to those respective countries. It is cheaper for those countries to send the cod 10,000 miles in each direction than it is to hire people locally to fillet the fish. I found that startling. Absolutely startling. It's been happening for 20 years. Interesting tidbit of information. All right, in my last video, I talked about the Fed raising rates and tapering on its bond purchases. I gave a little educational thing about who would it benefit and who might it hurt. What happens when the Fed tapers and interest rates rise is that people will start going into safer assets and stocks will slide. The whole market might just tumble. And I'm not saying everything's going to tumble. The problem is debt. Too many companies and individuals have too much debt. But the companies that have too much debt are the ones that are not going to survive the interest rate hikes. Right? Companies have been taking this easy money and throwing it in buying back their own stocks. And it inflates the price. When you have a buyer buying back those shares continuously in large amounts, it drives the price of the stock up. Thus, it increases the earnings of the CEOs because that's how they get paid. It increases dividends to shareholders, and it makes the company look more viable. But it's all on borrowed money. They're not being innovative. They're not building new plants and hiring new people. Well, geez, we saw the job reports, 199,000 jobs in December. They were anticipating 400,000. Usually December, the job hirings swell because of seasonal hires, right? That didn't happen this year. 199,000. They claim that the unemployment rate is 3.9%, but that's just a joke. Anyway, back to these companies. So they buy the shares back on borrowed money. And then what happens when they have to repay this debt and the price of their stock is sliding because of the Fed raising interest rates and tapering its bond purchases and trying to flatten out their balance sheet? Well, a lot of those companies are going to be forced to sell those shares back in the open market. And what happens when you have a large player selling a lot of shares? Well, the stock price goes down. So we are going to see some fires, I believe, because of debt. And when I say fires, I mean some companies might tither on bankruptcy and closing their doors for good. Right? A lot of companies just aren't financially stable enough to warrant the declining price, having to sell their shares, and not being innovative and growing in the fashion that they should for the amount of money that they borrowed. So my concern is what the Fed is going to do once this happens. Oh, and by the way, this video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. I changed the artwork behind me. That painting is for sale. I will put a link below if you're interested in purchasing it. It is a really cool chimpanzee, and he's playing the market. Anyway, back to Jerome Powell and some of these companies. So my concern is that there will be forest fires, right? There will be a patch here and a patch here, and companies will start to burn. And what if the Fed is concerned so much so that they don't want these companies or the world to implode, is that they reverse course and they go back to a 0% interest rate? What will happen then? And the Fed can very well do that. Or should they let those companies burn? And after a forest fire burns, you're left with really fertile ground for new companies to sprout up. And I think that's exactly what should happen. But I'm worried that the Fed is not going to do that. I'm worried that the Fed is going to continue to print money, and then our currency will devalue and we will become like Venezuela. Anyway, those are some of the risks that I see. And I think that we should let those companies burn. I know it will be more job losses and it will be pain to a lot of people, but in the long run, it will be healthier for the economy to get rid of the dead weight, the ones that are dragging everything down. And we know there's so many of them right now. It's all about debt. Also, credit card spending was up. A third of Americans spent more on Christmas than they anticipated, and now they are feeling the pain. When interest rates rise, you're not going to be paying 16 to 21% on your credit cards anymore. The interest rate is going to rise, and people with debt are going to be hurt, just like companies with too much debt are going to be hurt. Anyway, be safe. Pay it down. The stimulus is over. There's no more coming back to that, nor should we really expect it to. They are trying to open the economy, Omicron or not. Things are going forward, and you need to get smart with your money. If you don't need to buy something, don't buy it. That's all I got. Save your pennies, put them in a piggy bank like we used to. Stay well. Thank you, as always, for watching. I'll talk again real soon. I would love to know your thoughts. Do you think the Fed is going to come in and save the day again if this should happen and lower rates back to 0? Or do you think they're going to go full steam ahead and let the fires burn where they may? All right. Thank you so much for watching. As always, I really appreciate you for taking the time out of your busy schedule to watch this video. Give it a big like, subscribe to the channel, be kind, call someone, tell them you love them, and don't forget, chimpanzee is waiting for you. All right, have a great day, folks. We'll talk again soon.